Hello and welcome to this beginner guide, equity and future trading, the basics from Wall Street. In this first video I want to go over some key terms that traders are using, like a long and a short, a scalp, a day trade and a swing trade. Let's start with a long trade. When you're going long a stock, you think price will go up. So in this case I will buy the SPY at this level at the 166.18. This will be my buy level. And I think the stock can go up from this point. So the price starts to rise and you put your sell order out, for example in this area 166.70. Now when you're going short, you think price can drop, so let's go over this here. So price starts to rise again and we'll come into this double top at 167.42. and you think, okay, the price can drop from here. You put your sell order out at 167.42. So you will ask your broker to sell X amount of shares from the SPY at 167.42. You get your fill here, so your shares will get sold, and price starts to drop again back to the 167 even number for this example here. And you will cover the short position, so the difference between the sell and the buy price, that will be your loss or your gain. Now let's go over a scalp trade here. What's a scalp trade? A scalper will only buy at the right technical level and he will buy a large amount of shares. So as you can see, SPY is coming down. You see this level, the 166.18, and you think, okay, this can be the low of the day. And the scalper will put his buy order out here for 5,000 shares. And the stock starts to jump back to this 167.28. And most of the time he will cover his position here for 10 cents. So he will make a quick $500. Now a day trader can buy the same level, but he will only buy a few hundred shares of the SPY. And they think, okay, I will look for a larger gain. In this case, I will look for $1. So we'll cover his position right in this area, the 167.10 to 20. This will be his sell price. So the scalper will buy a big position and the day trader buy a smaller position. Now the scalper will use a stop loss from 10 to 15 cents to cover its position. Now the day trader can use a larger stop, in this case 40-50 cents. So that's all based on what risk you want to take in the markets. Now the swing trader will use the same tactics as a day trader, but he will use a larger time frame. Let's jump over to Chevron here, to the daily chart. So as you can see, Chevron came into this double top right here, the 127.38. Now a swing trader can see this as resistance, and he put his sell order out or a short order out at 127.38, and the price starts to drop. He will look for more than $1 on a swing trade, and he probably will look for a $4 or $5 gain. In this case, he will cover his position at the 122. 50 moving average right in this area. Okay guys, this was part 1. I will see you all again for part 2. We will go over some key patterns in the stock market